All right, everybody. Looks like we just went live here. Welcome back to Top Trades. Been an interesting couple days. Got a lot of good market stats uh, to throw at you guys today, and I'm sure Enrique does too. We had the first back-to-back gains in the S&P and the Nasdaq since this pullback began in mid-February. Big, broad rallies of what'd you say, Enrique? What is it? 290% upside days in a row? Is that the number?
We saw two 90% upside days in a row on Friday and yesterday, I guess it was.
Yeah.
Like even though the market wasn't up a lot, we had a 90% upside, which just so everyone knows, that means that 90% of shares moved higher, not lower, even though they didn't move a lot yesterday.
And uh what was interesting about it too was the fact that yesterday a lot of the big mega caps were flattish to down while we saw more participation through the market. So, and we're seeing that happen to that continue today actually with the mags getting hammered right here. What do you make of that? Do you think this is a bigger rotation? I know there's a lot of folks talking about that right now, or do you think this is just the ebb and flow of this corrective move so far?
Well, they can be the same, right? It's well, why can't both those statements be true? You and I were just talking. You made a comment about the Mag Seven and mentioned that Bitcoin was down, and I said, well, they're kind of the same trade. And you're like, wait, what do you mean? And I was like, I said, I don't know. When I look at the S&P 500 last year, everyone goes, it was all about the Mag Seven, but then I'm like, it's actually a little bit more because it was all about anything AI and anything Bitcoin related, frankly. And I only say that because I've been finding, I found a company today that it's got a great company, great track record. I mean, look, I'll even share what it is. It's VERX, okay. And we can talk about this idea in a little bit.
V
Um,
VT, all right.
VERX. So the company's called Vertex. Um, it's a tax compliance software company. Okay, so it's a tax preparer basically for mid-sized businesses. Look at that chart, and you'll see the stock had a huge run, and the stock's been slammed. We can talk about Vertex in a second. We'll give it
Okay.
away as a free idea today. But let me make my point. Is last year wasn't just about the Mag 7, it was also about Bitcoin. It was about Bitcoin related, but it was anything AI. Because what I'm finding right now, I'm just finding a bunch of awesome companies that are not Mag 7, that are tangentially AI related. Last week's Maverick idea was one. This week's Maverick idea, well, this week's Maverick idea maybe Bitcoin related, but I have another one in the hopper that's sort of AI related. But these are companies that are great companies that they're not AI. Like they're construction companies, air conditioning companies, things like this. So my point is this: is that like the market last year wasn't just about the Mag 7, it was this whole AI Bitcoin complex. The fact that they're selling off together means to me that I'm less concerned about the fundamentals, because if a group by itself sells off that has all the same fundamentals, and then I'm very concerned. Or if like everything in the market were selling off, I'd be concerned about the economy. I just think we had a year where these stocks did nothing but go up and
Yep.
everyone piled into them. And guess what? You don't unwind a year in 6 weeks. I would argue if you pull up the chart of the MAG, I want to use MAGs, the ETF,
Yep.
for
I had that up. There you go.
yeah, for so I only have one screen today, so I'm not looking at your screen. I'm looking at my Bloomberg screen. Um, Mags. I mean, look, Mags actually, while it consolidated in the back half of the year, was at a new high in December.
Hmm.
And I just don't think you work off that sort of move. That let's go back 2 years. Let me just go back to 2023. I'm looking at 2023 from, I mean, wow, holy cow. I'm just looking at my chart. I'm sorry, I can't see yours. From
Sure.
April of 23, it was at $24 and it just went straight up.
Yeah.
Like other than August 5th, it was just this, like, I mean, I guess it took a while in 23, but from October of 23, it's just one of the most beautiful charts I've ever seen. And
Yeah.
this is on like $10 trillion of market cap, So you're not going to unwind that in 6 weeks. And what I think is happening right now, you made the comment. I mean, the mags are sucking wind right now today. Bitcoin's doing poorly. This is what happens at a bottom is you've got chop. Like, you very seldom straight V. Most often what you do is it's like it's like an airplane shaking up and down, and people are getting thrown out of the plane here and there. But the plane's still flying and it's still going to its destination and it's still moving higher. So I think this is all very natural. Every I said this Kramer quote the other day is that every bull market feels the same and every correction feels different, but they're not. The price action's the same.
Yeah. So to paraphrase, the way you're thinking about this is we could see continued continued underperformance from the Mag 7/8/ related names while this market bottoms out and other stocks begin to move higher. So a rotation into different plays and maybe some continued chop and weakness from last year's leaders as they kind of bleed off some of that excess momentum, like in weeks, months ahead.
Yeah, mostly. I think right now we're poised for a snapback move back above the 200-day in the market, and everything's going to move up because in this last phase of the sell-off, everything moved down. Take a look at the S&P there. Pull up the KB, the bank index, for instance, though.
Was that KBR?
You should use. Hold on one second here. KBE. Hold on, I can't. I'm. It's not letting me pull up my Bloomberg. No, hold on one second here. What's it doing? Oh, there we go. Use BKX index is what I usually use. That's the KBW.
I got it.
Sorry again, folks. I've got only one screen here, so I'm a little bit more. Look at what happened there. That was up at its highs, and then just in this month, in March, that was the March swoon. So, like when we say rotation, I think that everything's going to bounce first. But I think what's going to catch a bid, I mean, I don't know that the Mag 7 and certainly certain members, Tesla and NVIDIA, are going to lead the market higher. I think it's going to be a lot broader. It can be banks. I'm interested to talk about your energy thing. But let me add a couple other points just because I have them in my head. The other thing you mentioned, the Russell. The Russell was actually up 4 or 5 days here recently. So that's the first time that's happened in a long time. And, what I find so interesting, and I'm going to leave at this point because it has to do with what I was saying about a potential like violent snapback in the market, is the sentiment indicators right now are all at like historic bearish levels, much sooner than they would be in a sell-off like this. So I was like, what's going on? I'm confused. Like, it doesn't make sense to me. And then I saw this poll. There was a poll about Trump, and it said Trump was at historic levels of approval. And for this point in his whatchamacallit, in his administration and all that. And I kind of also scratched my head because I was like, well, I like a lot of the things he's doing, but it doesn't feel like historic levels of approval out there. I just got to tell you, I know plenty of Republicans that are also a little like, eh. And then I looked at the data, and it was this craziest data set out, this particular poll I've ever seen. I should find it. It said that 97%, and I think this had to be slightly wrong, but it was right direction. 97% of Republicans approved, and 3% of Democrats approved. So what happened is, like, yes, he's technically at a very high level of approval, but we've never seen a ratio like that. And what I think is the subtext under this market, I'm going somewhere with this. I've been reading all these articles about people liquidating their IRAs and going to cash or buying bonds because of Trump.
Yeah.
And I'm just like, this is insane. Like like this is like 101. So I think what's happened in the March sell-off is when the history books go back, it's going to be a Trump-induced like hysteria sell-off, not because what he's doing ends up being bad for the market, but because people were just like, oh, it was almost like a political statement. And so and some of this is coming up through some of the numbers and all that. I'll tell you though, that is a powder keg.
Yeah.
A powder keg. Rates are down, inflation is fine, economic growth is fine, employment numbers are fine. He's not going to end up driving us into off a cliff, because he didn't the first time, and he's not going to do it now. And first off, the first four things I've said are just fact. If I'm at all right about number 5, you could see a V here like nobody's business. I'm talking, back at new highs in the S&P in 2 months, 3 months. And again, with or without the Mag 7, I don't think it really matters.
Yeah. Yeah, it's interesting you mentioned that, the Trump related selling, because I remember during the first Trump administration talking to my friends who are wealth managers, and they were saying that they were getting a lot of phone calls about people wanting to just yank all their money and putting it into T-bills or something like that. Well, when Trump first took office, and it was more of a political reasoning than anything. And so they were spending a lot of time on the phone talking people off a cliff from like cashing out their portfolios. And I don't know if that's the case right now. I haven't heard from anyone mentioning that now, but I have heard from people who, are nervous about a Trump-induced recession, and that seems to be a very mainstream narrative that's floating around.
This time, I think it became easier for some of those people to sell because, number one, he's been a lot more aggressive with a lot more economic noise out of the gate. And it all makes sense to me, because last time he didn't think he was going to win.
Right.
So it was hard for him. He didn't really have a plan. This time he did. And I think people are sitting on big gains and all that. But that's the kind of stuff I like to hear. Like, like all the technical stuff is lining up really, really nicely. And what I like to hear is just read this person and go, oh, I know I'm not supposed to sell, but like, I can't, I don't know what Trump's going to do. Just bring it on, man. Just bring it on. So I went back and looked at the long history of presidential administration induced recessions, and went poured through all the data, the absolute lack of any data whatsoever, because it's never happened. It's not a thing.
Yeah.
So I don't think it's going to be a thing now. And so people want to, they want to, they just want to express their political beliefs. And everyone, look, I support their political beliefs, but when you start mixing politics into your portfolios, you're going to lose. You're going to lose. Yeah. I could have come up with plenty of reasons to liquidate during the Biden administration. I probably could come up with reasons with the whatchamacallit. But I want to take one thing. Holly is asking about the tariffs that hit in April. And I don't know, do they hit in April? Like, I mean, I have lots of answers to that. First off, I don't think they're actually going to hit in April. Second, what does hit? How big is it? Third is like, what is the actual impact? I kept on seeing what was the article? It was something like it wasn't maple syrup and it wasn't oil, but like, oh well, so there was an article about Canadian oil, and the article screamed 70% of imported oil comes from Canada. I was like, whoa, 70%. And I'm like, wait a second. What percentage of our oil's imported?
Right.
Well, actually, it's about 20%.
Yeah.
Okay. So that means, well, that's still a decent number, 14%, but we're talking about a 10% tariff on that. So, it's not nothing, but like, it's just, don't believe the hype. Don't believe the hype. Be patient. That's always true in the market. That's always true. Trump, Biden, whoever. And that's the whole thing. I just don't care a lot about who's in the administration unless it presents me with an opportunity. And I think it's presenting us with an opportunity.
Yeah, that's a good point. And I think also, like, if we do see flat to choppy action from last year's leaders, we're going to still have that bearish narrative hanging over the market, whether the majority of stocks are going up or not. I still think there's going to be, like that's going to be the main headlines when I walk by the muted CNBC TV, that Matt always has on over there in the corner. It's going to be all about, Nvidia
yeah.
or how much Tesla is down, or pick your poison there on that one. But I think that's going to be the prevailing narrative, even if we do, we do start getting a strong, a broad rise that continues from those Friday lows and the breadth thrust that we saw. So I think
and what's going to be interesting, what's going to be fascinating to watch, and you and I have just been through this so many times. I'm going to tomorrow on the Maverick, which I'm doing for the offices. I'm going to share Charlie Bolello in his. So guys, there's this guy named Charlie Bolello. Here, I'll spell his name in the chat. He's a strategist. He works with something called I forget the name of the company because it's got kind of a weird name, but he has a free newsletter and he does a great job accumulating data and information. And he did this thing where he looked at all the sell-offs that have the 4 biggest sell-offs since the global financial crisis. And he took where we are and he took the headlines from each one of them. And every time it was like 2022 is the perfect example. Do you remember at the bottom of 2022 that the economists came out and said that there was a 100% chance of recession? Not like a 60, not like a 90, not an 85. They said there was a 100% chance of recession. And my point is, what's going to be really fascinating to watch the wall of worry as the S&P goes back towards the 50 and 100-day moving average, as the S&P goes back to 6,000, and Trump's still spouting off about tariffs, and there's still all the craziness going on. People are going to be absolutely going nuts, being like, how can the market go up when Trump is talking about tariffs? And when the rally kicks in, because everyone's positioned wrong in the short term, it's just going to be relentless. It's just going to go tick, 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 tick. And so, the key to me always in the short term is kind of, being on the other side, like of where all the unanimous consensus is. I think what's great about your strategy, Greg, is you're finding momentum, but then you're finding when the consensus is kind of turning. Like, where it's not negative, because you're not looking for the turn from negative to not negative or positive. You're looking from the things are good and wow, now I'm getting excited. You buy excitement. I don't do the opposite. I do something different. I love maximum pessimism, because the thing about maximum pessimism, which is where we are right now, I don't need it to be a booming economy. I just need the world to not end. Like, world doesn't end, kind of stays where it is. We're back at 6,000 in a nanosecond. By the way, 6,000 is still below the 50 and 100 day, and the 50-day moving average as of today or tomorrow will go below the 100 day, which is fine. Right here.
That's the green and the blue for those looking at the chart.
Yeah, which is fine. That's not abnormal. We had that happen in 2023, and we survived it. It's mathematically at this point, it's a guarantee that it's going to happen. But do one last thing. Go back to that 23 sell-off that started in July and went to October.
2023?
Yeah.
There you go.
That's what this is looking like to me. But look how we V'd out of that.
Yeah.
Like, I tell you, I'm just telling you, he does gets some stuff going on tariffs, gets some stuff going on Russia, gets Iran, puts them in place, starts talking deals. Oil goes to 50, 60, which we can talk about with your oil call, which I think is intriguing. Yeah. I think we recover no matter what, and I think there's a real good chance we be at this.
Yeah, I don't remember exactly the economist prediction of 100% chance of recession. What was their reasoning at the time? It was just,
well, I think it was around the time the Somme rule came out. I don't know if you remember the Somme rule. Hold on one second. I'm looking for it. Economists say 100% chance of recession. It's an absolute fact, though. Uh, let's see here. Okay, October 17th, 2022.
That's like the
Oh,
exact bottom.
the bottom was the 13th, actually.
Yeah.
I know that for a fact.
Okay.
October, I'm going to a Bloomberg story. Let's see if I forecast for U.S. recession within year hits 100% in blow to Biden on October 17th, 2022. A U.S. recession is effectively certain in the next 12 months. The new Bloomberg economics model projections. Bloomberg economists, blah, blah, with the 12-month, but hitting up 100% from 65% the previous model. Tightening financial conditions, persistent inflation, a hawkish Fed, So that back then it was based on the Fed was going to drive us into recession,
Oh, okay.
But it gets to my point. Anytime we get to, if you see some any headline that says 100% chance of crash or recession, just buy. I just buy. I don't care what you buy.
Right.
Like that'll work, at least for a trade. And that's the most important thing I can say here, because I do want to say this. People will hear me right now, and and be like, "Oh, Enrique's so uber bullish all the time. He's just like says buy, buy, buy." He said buy 3 weeks ago, and I lost a bunch of money. And what I'm going to say is, well, no, because things don't work out in a day, a week, or even a month. They take multiple months. But right now, I'm just saying that we go back to those moving averages. Like, even if we're in a bear market, it's going to happen. It's exactly what happens in bear markets. I don't think we're in a bear market, but I don't care. This is the one. There's one or two times a year I don't care whether we're in a bull or bear market, because we're so primed to bounce. It just doesn't matter. If we're in a bear market, it probably bounces more.
Yeah. Yeah, and just to clarify that for people listening, what you're saying is you don't care if we shoot back to new all-time highs here, because there's so much money to be made between here and just getting back to that 6,000 area in the S&P.
I've got a dozen things in the Maverick that'll make 15%, make double-digit returns in a week to a month if we're in a bear market.
Yeah, yeah. So I mean, it's all about being tactical here too. It's not necessarily just.
And I just wrote Thursday's Truth and Trends, so I'll talk about it because I end up previewing, and one of my points was about using cash as a trading weapon, and which is like when you're investing, you have to be 100%. You should be 100% invested all the time, and dollar cost averaging. I'm a fan of all of those.
Right.
Like I would just stay invested as your long-term portfolios, and then security selection becomes really, really important. But when you're trading, if you're a good trader, you should be 20% invested a bunch of the time, because you should it's the same sort of discipline, but now you can use capital allocation as a discipline as opposed to security selection. Look, it depends. There's trading strategies that are looking at the next hour, and trading strategies looking for next month. But I'll tell you, every great trading strategy uses cash as its secret weapon. Yeah. Trend following, trend mean reversion, all of it uses cash. So embrace cash. Now, I say that also because the time to build cash is at highs, and the time to invest that cash is at lows.
Sure. And like, people who've been with the trading desk for a long time know how we roll with that idea. If conditions are great, we probably have a lot more trades on. When conditions aren't so great, we're pulled back and we're mostly in cash, and we're just picking our spots.
And you and I go inverse.
Yeah. Yeah. We go back.
As the market's at highs, more of your setups develop, and all of my setups disappear. And as the market corrects, all of your setups go away, and all my setups start coming together. So,
which is interesting too, because like right now, there have been some really good, like, I don't want to say necessarily rotational plays, but there have been some really good areas of the market we've been able to capitalize on. We just sold half of our SILJ calls for triple digits because there's still stuff going up right now. Like silver looks great. And, I felt like, just to review this for some people that were asking about it in the chat earlier, we hopped on right here on the 11th. Perfect time to hop on. We didn't have a single downtick basically on this trade, and played it all the way up to here. Took half off the table. We can let the rest of it ride. probably a little bit overextended in the short term, but precious metals look good. Got back up to these highs right here. If we just ignore this kind of, I don't want to say blow off top, but this top right here, got back above, or at least teased 13. I figured that was a good spot to take some money off the table since we've been going straight up right here. But there's opportunities out there. This isn't just, this isn't just stuff going straight down in this market. There's stuff.
Well, and we don't do it as much, but I'll tell you so there's two things that have me really bullish. Well, there's a lot, but I'll say three to think about. Number one, just all these sentiment technical indicators are just screaming off the charts. Okay, we talked about that. Number two, I sort of said this before. I don't see any big movement in rates. I don't see any big movement in credit spreads. I don't see any of the movements that we see in a real crisis. They're not there. Maybe they'll come in. People say, "Oh, they haven't happened yet." Okay, but number three, every single international market is at all-time highs.
Yeah.
So what was the most out of balance trade 6 months ago? Long America, avoid or short everything else on the planet. That was the trade. And de facto, long AI and crypto and just not involved in everything. It doesn't have to be short, right? It could be not involved. And we're just unwinding that. And that's good. That's natural. That's healthy. I get more concerned. Like if the DAX in China and Japan are following our market,
yeah.
Like if they were down with us, now I'm getting a little bit more concerned. because do you know what? And let's just talk about tariffs for a second. This is actually a great example. If the tariffs are correct, and we know he's going to put 25% tariffs on Europe, or threaten to. There's no doubt about it. Do you think the DAX, with Germany's economy being the most export-led economy on the planet, would be at new highs if the market really thought that the tariffs were going to happen? There's no way. Look at China. Yeah. That is literally the largest exporter in the world, and it's hitting new highs.
Yeah.
That's just telling you the price equals truth. The market sees. Ignore the noise. What's happening right now, politically motivated IRA sellers who hate effing Trump, and I said effing there because they're like, and that's fine. You can have your views. I'm not. I don't make political statements. But they're selling their stocks in a spiteful panic, and but everything else out there is telling me that the world's not collapsing. The only thing that's collapsing is their future returns.
Yeah, I don't know if you're looking at my screen now. I just pulled up FXI right here. I mean, we're consolidating right here at levels we haven't seen since 2021. All of the big China ADRs look really good right now. I know some of them are reporting earnings this week, but I mean,
it's amazing. Like how can Germany and China be at new highs if we're going into the tariff wars? If we're going into the McKinley era, one of these is going to be wrong, and I'm going to go with it's the perception that Trump has no idea what he's doing, is an absolute crazy person, and is going to drive us into a wall, just like he did in the last administration. Oh wait, he didn't. Yeah. So I like listening to the market as opposed to telling the market what's going to happen.
Yeah. While you were talking, I was just pulling up some different charts. I like some of these looks. PDD has earnings on Thursday. I probably wouldn't step in front of earnings on some of these Chinese names, but I think BABA looks good here. I feel like it's trying its best to get out of this little consolidation, this flag or whatever you want to call it. And Baidu also looks really good. When do they report? They don't report until the end of May-ish. So I think this is a nice looking turnaround here. It's not as strong of a move as BABA, but maybe a lot of the rising tide pushes a lot of these higher. I like a lot of these charts right here, and look how different they look than the mags. Some of these other charts out there, and I think that's good information.
Well, someone said too. I don't know where I saw this, or maybe I just thought of it. I can't remember. It all gets mixed up in my head. You take 10% out of the mags and you put them into everything else, a 10% move out of the mags, and you take 1% out of the mags and you put it into the China stocks with their float, and they go up 30%. These companies are so big that it doesn't take a lot to get, 10% out of the mags is, off the top of my head, 30, 10, 12, 13, whatever. It's like $2 trillion, $3 trillion. I mean, off the top of my head, that's the market cap of the entire German market stock exchange. Let me pull up some of the charts. I want to actually check both those numbers.
Yeah, I'm looking at Baidu, and it's a $33 billion company. It's not, it's by no means.
Is Baidu only 33 billion?
Yeah, that's
I
it.
mean, that's like the cash flow from Apple in a quarter.
Yeah.
Like seriously. Hold on one second. I want to get this for you. Okay, so the total market capitalization of the German stock market is about $3 trillion. So the right now, the loss in the Mag 7 from the peak is equal to the entire German stock market. But let's go back to, let's make this actionable for people. Like, what does all this mean? Okay, a couple things. With those things at highs and us at a recent low, it indicates we're more likely to go back higher as opposed to lower. And number two, to Greg's point, there's always a bull market somewhere, to quote Kramer, actually. And they're out there to find. We have two very complementary styles. You're still finding the breakouts, and what I'm doing is positioning. I will be selling 20, 30, 50% of what's in the Maverick probably within the next 2-3 weeks. I'm very confident of it. But it's a target rich environment.
Yeah, like I said earlier, like people need to understand, like it's about being tactical. It's not it's not about predicting, new highs by a certain date or any of that. It's taking advantage of these tactical opportunities when the numbers are hitting for you, and when I'm seeing the breakouts. And those are the two complementary strategies that we have going on for us.
Should we talk real quick? Should we talk, because I gave it, should we talk about Vertex, this name I was looking at?
Yeah, what was the ticker again?
VERX.
VERX, let's do it.
So it is a $5 billion market cap today. Mm-hmm. The company was founded in 1978, King of Prussia, Russia, by this guy, Ray Westphal. They basically work with, mid-sized companies doing tax compliance, which is part of your tax filing. But if you ever have a company that you got to do sales tax and, all this other stuff, and there's a lot of, there's online companies that do this now, but they do it at scale, okay? And so they came public in 2020. Out of the gates, they were kind of missing numbers. It's all bad. This is, again, 2020, 21. But in the last 18, 20, 24 months, the stock's gone from 10 to 60. And the reason the stock's gone up so much is they've seen an inflection point in their business where revenue has absolutely taken off. And the reason is actually AI. It's a company that's legitimately benefiting because they figured out that when you go through all the tax stuff, you could use AI to begin to figure out, and they're doing it. Think about your personal tax return, and I know you're very wealthy, so it's probably very complicated, but like your personal tax return times 1 million is just one company when we're dealing with that. And so the stock had this huge run, and then the company came out in February, early February, and the company's covered by, let me see how many analysts. Company's covered by 13 analysts, and the company talked down the upcoming quarter. Talked down the guidance. They said that our full year guidance is going to be a little lower on earnings because we're going to take all this money we're making, this windfall of revenue, and we're going to invest it into more technology and more AI. So the stock, which was at a 52-week high, sold off right into the market sell-off, which was happening at the time, on everything AI. And then on the 26th, they reported numbers. They beat the numbers. They said exactly what they said they were going to say. that everything's great, but we're, the range, the range of earnings they gave was still with the original guidance. They just said we might be at the lower end of the range because we're investing. Note they did it for the new year, and the stock got killed. You went below an RSI of 30, and now you've come back above it. I mean, this thing had an RSI of like 14 or some crazy thing. My point is, this is what this market is serving up to you. I can't tell you how many times, just what are the hallmarks here? A company for the new year lowering guidance, a company that's beaten guidance almost every quarter. Well, that's the reason they beat guidance every quarter is because they know how to manage their guidance. They want to invest in the business. You do it now. And then what happened is, I'd say normally this stock would have gone from 60 to 48 in a normal market. Instead, it got cut in half. And they're going to come out, and on May 8th, they're going to report a number, they're going to beat the number, and they're going to raise the guidance, and the stock's going to be back at 48, okay, which is where it should be in the first. This is what this market is giving you. We're not going to have these in 6 months. We're going to be, we will not find anything as good as Vertex in 6 months, in my opinion. So you need to be, be greedy when others are fearful, fearful when others are greedy. The time to be fearful was at the highs in February, and the time to be greedy is right now.
For a play like this, are you looking at a target of like between like 43 and 48-ish? Like on a
I would start. Okay, well, you're doing, basically start at the 200-day moving average.
Yeah.
And then we've got those declining, and so to me, the magic of 45 on this stock is by the time we get there, all the moving averages are going to be there, right? And that's going to mean that pretty much everyone who's bought this stock anytime recently has a 45 cost. That's going to be some consolidation. Note, when you go back to when the company broke out on November 5th, right around the election, which is a whole nother story here. It was off that 45, that 40-45 level where it had consolidated. And so this is the kind of thing we're seeing that I would have killed for ideas like this 3-4 months ago when we launched the Maverick. And by the way, I'm not putting this in the Maverick. I'm giving away for free today. We got another awesome one tomorrow that's just as good. Bigger company, lower volatility, even higher certainty of return. So, sorry, the other idea that I'm working on for the Maverick. We got another idea for the Maverick too, but we'll keep that in the rest.
What do you make of this move in precious metals? Just to shift gears briefly. I mean, gold has powered a lot higher than I thought it would. I thought we'd see more silver outperformance. It's catching up now, and I put that silver trade on. But I mean, gold is just absolutely ripping here. I know this isn't something that you'd want to buy at these levels up here as like a trade or anything. But where do you see what do you see this in reaction to or in relation to with what the market's doing right now?
Did you read, and I think a bunch of people here are Omega Wealth Circle, but we've got our colleague Sean, who writes the Daily Reckoning, and he had a gold piece today that he was pointing out. A lot of people have probably heard this thing that's happening where all the physical gold was stored in London that kind of is behind all of the ETFs and futures and all that. And since Trump has come into the administration, all over the world, people have been asking for gold delivery. So when China and Russia had been buying gold, they always asked for physical delivery. But since Trump came in, there's basically been a run on physical. And I will tell you, when I read that article, I was like, whoa, that's really interesting, because the challenge or the setup that's fascinating here is that I don't know off the top of my hand ratio of financial to physical gold. I'm going to try to Google it, but the reality is that the amount of gold that's traded is, I think, 5 or 10 times the amount of physical gold. And I apologize, I don't have the number, folks. I'll find out. So what could happen is if everyone who owns financial gold says, oh, damn, maybe I'm not going to get my physical gold, they're all going to ask for their physical gold. And then gold goes through the roof. So it reminds me of, like, obviously what happened with the Hunt brothers and silver in the 80s, which was a different, it was a coming from a different place, but in some ways had the same dynamic, tying up physical in contrast to the financials markets. I, that's a very interesting thesis. And I got to tell you that, like, I got to tell you what's interesting about that too is you don't have to be right, and you can see gold spike to 4,000.
Right. Sure.
It just people have to think that it could happen. So I think there's elements of that happening, here. But I'll give you one last one. Remember that when gold goes up, it's a risk asset, right? Gold only goes up when risk assets are okay. So China's at highs, Germany's are at highs, gold's at highs. Like, it's just the world's okay. The world's okay. But I think there's some unique dynamics going on with gold in regards to the relation of physical to financial.
Yeah, that's an important point too, noting that gold is a risk asset as well. If people are scared, they want cash. They don't want gold. If you remember,
exactly. If people are scared, you know what? I'll tell you what happens when you're scared. You go, damn, how much is my rent?
Yeah.
How much is my mortgage? How much is my car payment? Okay, the kids have school. I know I've got $500,000 here in stocks and gold and all that. And I know the gold's not going down, but you know what? I can't pay the kids' camp with gold.
Yeah.
So yeah, you know what? I'll just sit on some cash. And we just haven't seen that. We just haven't seen it because that's not what's happening. I maybe have never seen, if this ends up playing out with being what I think it is, we're seeing probably the first episode of political selling, in the stock market that I've ever seen. Like, people can kind of sell because they don't like politics, but I think you're seeing spite selling, you're seeing hate selling, the stock market because people dislike Trump.
I like that, spite selling.
Yeah. Yeah. I hate sell. This is my hate sale.
But it makes sense though. I mean, like, because we're seeing that in I think we're seeing that in Tesla too. I think Tesla has other problems. I think that's also the case there. I mean, Tesla's been cut in half since December.
That is such a great point. Like, and so by the way, I'm not making so when I tell this theory about the hate selling, I didn't make that up. Like, I'm seeing articles. I read an article in the Wall Street Journal. I think I posted it to a bunch of the weekend where, and again, it's hard for me to put numbers behind it because I don't know how much journalists in a lot of the media, look, part of the media leans right, part of the media leans left, and they're going to do what they're going to do.
Yeah.
Some on the left have gone and they're like, oh, look, they're selling. But the article I read was in the Wall Street Journal, which is relatively balanced. I mean, so we can always find anyone who's doing anything. But the Tesla example is actually, Tesla is absolutely a hate sell. Like, they've got, Tesla doesn't have issues. It just was overvalued and they're going through an investment period.
Yeah.
That makes me look, this could be the hate sell sell-off of 2025, that we'll look back on and be like, can you believe that happened?
Well, what's really funny to me is the fact that Tesla's always been an emotional stock ever since it really, caught people's imagination 15 or so years ago. And the fact that it's actually ramped it up and gone to more of an emotional type of holding is pretty incredible. Since there's
Elon Musk, man, like can I, this is off topic, but I've actually, so I need to buy a second car up in Connecticut. And I think I may go buy a Tesla, actually, because everyone I know who has a Tesla raves about them. Like, I had a buddy of mine lent me his hybrid, and I got to admit, it was really nice to not have to go get gas. And, everyone seems to hate their Teslas. I'm not a value guy, but I love buying, like, panic. And, like, I think people are panic selling Tesla. I'm not going to say buy that stock yet, but I think people are panic selling their Tesla cars. So I don't know. I'll buy a great car at 50% of where it should be, because I need a second car right now. That's why. So.
Yeah, you need to put one of those stickers on the back that says, "This is not a political statement. I just needed a car like this one. Please don't break my windows," or whatever.
I live in rural Connecticut. Like there's no like I'm less worried about it. But no, your Tesla example is a great example of someone in the chat uh, you know, said TDS, Trump derangement syndrome, or and all that stuff. Look, I think there's TDS hitting a group of Americans selling the stock market, and and no one else is selling off any of the markets in the entire world. So, and I'm not disavowing that he's creating disruption with tariffs and all that. All I'm saying is, it's been. I put this on Twitter too. Saturday, Saturday was the 58th day of the Trump administration, or 3.63% of his total administration. And I wrote, having fun yet? We're 3.6. Now we're like 3.85% of the way through. But you just got to tune this out. Tune it out. Tune it out. Look at the data. The data's good. And then find the panic and go out and buy some great stocks. I'm going to go buy a Tesla. And yeah.
Right. And just to clarify, I mean, we're not making political statements here. We're just analyzing the madness of the crowds and how people are reacting.
Yes.
This isn't a rah-rah, Trump or an anti-Trump statement at all. This is just, we're taking the information that the herd is giving us, and we're funneling it through and seeing how that's reflected in the market. And this is
the panic is mathematical. The panic that I'm talking about is not an opinion of mine. It's in the data.
Right.
It's in the data. I can see the panic. And this time it happens to be because of this. Other times it's because we're going into a recession. Other times it's because, and again, I'm going to go back because I feel like in the heart of this, even for guys like you and I've been doing this, 30 years. So this isn't necessarily true for me because I really am like so immune to it at this point. But you just question yourself on these sell-offs. Do you remember the Japan yen carry trade in August, and how everyone, there's those funny memes. It's like one day they were experts on this, and now everyone knows the Japan yen carry trade. And there were people, it's like the Japan yen carry trade cannot be quantified, and it could take down the entire financial market. And so I called up a buddy who runs a massive credit fund. And we did a little exercise about how much was actually in the Japan yen carry trade. And we came up with about 0.5 to 0.75% of global financial assets had some real correlation to it. But no one was doing that. The market, by the way, in August was down because of how much it was up in July. Mm-hmm. And that's what I said the whole time. And it was Japan yen carry trade, Japan yen carry trade, the new depression. And now I say Japan yen carry trade. No one remembers. We're gonna look back in the Trump tariffs the same way. People are gonna be like, "Oh, the Trump tariffs. We're gonna end of America. Democracy's over. Trump tariffs." And we're gonna look at. Do you remember the crazy stuff that Trump said about Canada at the beginning? Right. Well, that was crazy, right? That's literally what we're gonna be doing. They've just seen it, been here, done that.
Yeah, I think that's totally fair. And I pulled up this is it right here on the chart right here. This is the yen panic on Monday, August 5th, right here, down 3%, and that was the low.
Yeah. I have one other thing that just popped in my head. I forgot. Do you remember that the stock market actually sold off on like the Monica Lewinsky situation? You're probably too young.
Yeah, I was in high school.
but so that's actually. But here's my point: is like just go back. The stock market had a big sell-off because of the Monica Lewinsky thing. Again, it didn't because of Monica Lewinsky. It did because the market was primed for it. So just be patient, find great setups. And one thing I will say is that I don't know. Sometimes we have a little bit of fun and have a laugh and things like that. That's so important to being a good trader is like focus on the data, focus on the math, focus on the known, have perspective, and just relax. In baseball, I'm headed down to Florida for baseball, for a week of baseball. We were just talking about it. There's this thing about you don't have to be a baseball player, I think, to understand about gripping the bat. Are you gripping the bat too hard? Because just imagine holding a bat, take your fist really tight, and go swing your arms. You have a lot less movement, right? You're not as strong when you're putting all your you're gripping the bat too tight. Versus if you grip the bat gently, you got all kinds of pop in your swing, and that's exactly what it's like as a trader. When you're panicked, when you're overwhelmed, when you're losing money, whatever it is, if you don't have a plan, you're gonna swing the bat, you're gonna strike out. You're gonna strike out. Versus take a breath. If things are going really bad for you, you know what? Cut your portfolio by half. That's the great thing about stocks. Like, I've been an entrepreneur as well. Entrepreneurialism I love, but it's much harder in many ways than stocks, because if you're wrong and you own a business, you can't go on to Robinhood and sell it in the next 20 minutes. Like, you got to fight that thing out. But that's the nice thing about stocks is, like, both if I'm right, I can take the profit, and if I'm wrong, I can just move on. So
Yeah.
I think that perspective is important.
Yeah, that's part of development as a trader. I think not taking the market personally. It's not against you if it's moving against you. It doesn't care about you at all. It's just that's what's happening. A couple of tickers here that folks are asking about it. I wanted to hit on Intel. I like this more and more here. It feels like it's trying to base out and get back into that gap.
I think there's going to be a TSM deal. Taiwan Semiconductor. The only challenge I have for the stock is I don't think TSM is buying Intel or any of that. I think it's going to be a big joint venture, which kind of leaves Intel in a little bit of a middle ground.
Yeah.
From a chart perspective, I agree with you, though. I like we talked about this before. I said this is, you build these big bases, and from a pure technical perspective, this looks real nice.
Yeah.
We've stabilized.
Yeah. And then FCX was another one getting into the copper, looks like. See what that looks like.
From the great state of Arizona, my home state.
This one,
that's ugly.
Yeah, it's a little work. Copper looks a lot better than FCX, which is interesting. I know this is kind of like the copper proxy trade. It's not a pure copper play, obviously, but
the short-term chart looks ugly. The longer-term chart, the 5-year chart, it's just done nothing. I don't know. Look, I think the economy is going to be okay. I think the demand for copper goes up. I think that copper's been going up and the stock hasn't. I would just do nothing. It's I've got a view on copper, and this stock hasn't been agreeing with it. So I hate to be right about my view on copper and lose money or not make money. So I'd avoid this.
Yeah, that's really good. And then Holly had Path in here.
Which one?
Path.
UiPath.
Yeah, iPath. Looks like a gap down on earnings and is trying to fill it. Still, I would still call this pretty broken. It's been in this big base here, and it's near its lows. I mean, maybe there's some sort of tactical advantage closing that gap, getting back up to like the mid 11s, but I don't know. I think there's better stuff for me.
I'm going to the earnings revisions. This looks like an earnings revision victim. I mean, recently earnings revisions have been moving back higher. Companies been beating. I don't know. Like, I think it's probably okay, but like, I guess part of me goes, I mean, it's still working off that gap from last year. Part of me goes, life should be easier. Like, I have so many companies that have great growth, great revisions, beating numbers that were 52-week highs 6 weeks ago that are now down 20, 30%. Why do I want to own this one that isn't any of those things? Yep. And so this is where I spent the other week a lot. I don't know how many people did it. Funny, my business partner in my software actually listened to the call, and he's like, "Yeah, I did that right after the call." Swaps, you don't have to go out and invest more as the market goes down. You could just take things that have bad charts and aren't growing and aren't beating numbers, and swap them out for things that have better charts and are growing and are beating numbers.
Yeah.
So this UiPath would sit there as a swap candidate to me. And I know there's a fundamental story, behind it. And so I'm not discounting into that fundamental story. I'm just looking at the numbers and all
that. All right. Next one up. Question about Hood. I own some shares of this in a longer term account. I think it might need more time. It's Hood tends to react with crypto too. Sometimes I think it might need to just let some more air out of this one. I mean, you got to realize how crazy this one was getting. I mean, the move here from what was it? This move from 23 to 66. I mean, it was up almost 190% since November up to that top in February. Give it some time, man. Let's
Yeah,
get out of this thing.
this one I really like for a bounce. But I agree with you that I think it's time is actually, I was thinking about the Bitcoin thing that we were talking about last week. And it's I saw a chart, something on Twitter that basically pointed out that Bitcoin the last 5 years has done nothing from April to October.
Yeah.
And we talked last week about how the chart is basically saying that. I think Hood, well, look, I love the Bitcoin long term story. I think Hood is actually a great company with awesome stuff going on. I think that I'll be surprised if Hood goes to new highs without Bitcoin going to new highs. So I agree with you. I like this. I love this one for the long term.
Mm-hmm.
I think just let it. It's probably going to bounce nicely, $50 tomorrow, which is great. That's 20%.
Yeah.
But is it going back to its new highs quickly? I'd be surprised. But I think it's a great company. This company is very misunderstood.
Yeah, me too. And that's why I have it in my longer term portfolio, and I don't have an active tactical trade on this one at the moment, just to be clear. Other tickers, Ian's talking about Southern Copper. Okay, we got that covered. We wanted to talk. We have like 3 minutes. You wanted to talk a little bit of energy. Can we squeeze an energy conversation into
Sure.
3 minutes here?
So I'm fascinated by energy. I'll tell you what. I like your setup on the. Sorry, I'm just going to pull up whatchamacallit, my chart for oil.
Sure.
I like your setup on the stocks. They had a good January. I just have a funny fundamental juxtaposition with them.
Yeah.
That I think, and it has to do that I have a very different view about what Trump's doing. I think, and people who meet me on Twitter will know a lot of this stuff. Look, I think that Putin's going to come back and say, no, I want this, that, and the other. I think Trump's going to go, okay, deal off the table. We're quintupling the amount of arms we're going to give to the Ukraine. And people are going to lose their mind. Be like, wait, what? You just cut off arms to the Ukraine, and now you're saying you're going to spend 5 times more money? You're crazy. You don't know what you're doing. He knows exactly what he's doing. He's going to, and Putin's going to look at it and go, damn, like he called my bluff. And so, when that happens, I think oil will be 70, 75. It'll pop back up. But I do think the Trump administration, I will just say this, they want lower interest rates and they want lower energy prices. Period. End of story. And I think that they're going to work on a deal with Russia, they're going to work on a deal with Iran, and they're going to work on pumping a lot more oil. So I like oil as a trade, and I like the technical setup. I just feel I'm not all in. If Biden were in the White House, I'd be all in on it, because he wouldn't be doing that with Putin. He'd be taking us down a road of more danger. But that's my one concern. So the church technically, but you'd hate to be right technically, and then there's peace with Russia, an Iran nuclear deal, and the world's washed with oil, and it's 45. Oil goes to 50. These companies are all still great companies, but they're not buys here.
Yeah, sure. Just some more of my thinking. When I'm looking at this from a tactical perspective, I'm not thinking that we get energy leadership, which would be a late cycle.
Yeah.
More late cycle event in the markets. I'm thinking more along the lines of a snapback. And I mean, going back, I don't have this line extended, but this has been the spot for quite a while and it could very well break down. We could see $50 oil. That's entirely true. But this seems to be the spot where buyers come in and have been buying oil for some time right now. It could fail here. It might not, but we're starting to see some of these energy names outperform. They kind of hinted at that back in December a little bit, and maybe they'll get going here. But I kind of like these ideas. I know somebody, was it one of the Patricks who mentioned, or was it David, who mentioned rig? That's kind of a fun one. I use rig as kind of my crazy
So I think
follow.
the drillers are interesting. You
Yeah,
know, I just have this. I just think that we could be in a world like I think we could be in a world of a much more peaceful world of washing oil in 6 to 12 months. I think that's Trump's goal, and it's hard for me to do like and that's when you buy the hell out of these stocks, right? But they're
yeah,
harder for me to trade as a snapback to set. But what I started with, could oil be at 73, 75? Look, oil was at 80 in
yeah,
January. It
yeah,
doesn't take very much, because he's going to go. The other thing too, he's going after Iran. He's Hezbollah is gone. Hamas is gone. Now he's going after the Houthis. They're gonna have no satellites left, and he's going straight at them. So I like it a lot as a trade. It's just harder for me to do anything beyond that.
nice. Yeah, that's fair. That's totally fair. All right, guys. Somehow it is afternoon. I feel like we covered a lot today.
Yeah, I went quick today. I mean, it always goes quick.
I appreciate all the feedback and hope we got to all your tickers that you were looking for. If not, feel free to drop them in the chat and I can write about them more this afternoon or tomorrow. Any last thoughts, Enrique, before you go out to spring training?
Well, next week I'm trying to schedule my hotel so I can do it from a hotel in Miami. I may miss next week. I'm not going to miss the Maverick, but I may miss top trades next week. But just be patient, tune out the noise. Buy fear, sell greed, buy fear.
All right. If we do lose Enrique to the South Beach club scene next week, then we might have Fundamental Matt on to talk about his portfolio, which is always fun. I know he's a fan favorite.
At this point, I'm more like the Fort Lauderdale beach chair scene than the South Beach club scene.
That's fair. That's fair.
Those days are past, my friend. So.
All right. Well, safe travels. Enjoy baseball for me and enjoy the warm weather too. And if I don't see you next week, I will see you the week after that. Take care, everybody. Thanks for tuning in today. Have a good one.
Thanks. Bye.